Let's get back to another zooming stock, and that is Amazon. They had a fantastic quarter reported last week, sold almost $90 billion worth of stuff in a 13-week period. Our next guest bought them on Friday as the stock was going straight up. Our guest is Greg Smith with Evolution Partners. Okay, Greg, you bought the stock on Friday at a lofty level because I think you think the stock is going to $4,000 a share. Make your case.
I think that's right. Good morning, Stuart. Yeah, despite the Zoom grilling of all the tech CEOs from our friends in Washington last week, tech companies put up a remarkable quarter last week. And all I have to do is invest with my eyes wide open. I walk around the streets of New York City and I see a growing and endless tidal wave of brown packages with smiles on them going into people's buildings. And if you also weigh that against the decimated retail landscape of so many stores closing and just the weak outlook and people sitting at home and working at home more, I think this just bodes very well for Amazon.
But to repeat, you do think it's going to $4,000 a share. You've said so on this program before. Give me a time frame.
I do. I shared with you back in May, I bought Amazon under 2,400. I was crazy enough to believe that it's going to go to 4,000. I think the other theme that's emerging here is the growing call from the Democrats to break up big tech. Many people might think this is a headwind for tech, but I actually think this could be a positive. Spinouts have been terrific for shareholders in the past. Look how much value Barry Diller's IAC has created for shareholders by spinning out companies, or eBay with PayPal. What do we think the value of Amazon Web Services would be if Amazon were announced they were spinning that out? So I think that could actually bode well for shareholders if we do see a breakup or quote unquote breakup of big tech. But in terms of Amazon, I wouldn't be surprised to see Amazon trading at the 4,000 level in 2021. Business continues to be on fire, and I'd like to see it pull back so I could add more to my position.
Okay, brave man. How about Facebook? I know you also bought either more of Facebook or you bought some Facebook on Friday at what, $250 a share. Make your case. Why are you buying at that lofty price?
Look, I think we're in a check and raise situation in light of these earnings. I've said to you before, in the market, I believe the buyers are higher. There's a lot of cash on the sidelines. These names are working. In my private portfolio, I've invested in more than 100 private companies. Any of these companies that are selling products to consumers on a direct-to-consumer basis have told me they're not spending less on Facebook. They are spending more on Facebook. Why? Because it works. They're acquiring customers at a fair price, and it's helping them grow their business, despite the boycott from some of the big corporate names of Facebook. For many of the smaller companies, it's working, and they are spending way more on Facebook.
Are you a billionaire yet, Greg?
No, I don't have aspirations to be a billionaire. Not this year.
What's wrong with you, son? Not this year? Not this year? You caught yourself just in time.
I wore a tie today in memoriam of all the dress clothing retailers that went toes up today. So okay. I don't know how much longer we'll be wearing ties.
I agree with you on that one. Thanks, Greg. See you again soon. Thank you, sir.
Thanks, Stuart.